In today's video, we're talking all things NIO stock and whether or not it is a great buying opportunity for you. So give me the format. Number one, an overview on NIO as a company and as a stock. Number two, we're focusing on NIO's products. Number three, what are some future market opportunities for NIO? And number four, what am I going to be doing? NIO was founded in 2014 and is a premium smart electric vehicle company in China. Not only do they design, but they also joint manufacture as well as sell their premium vehicles inside China. Now let's actually check out NIO's stock performance. At least year to date, we can see that NIO has increased by over 600%, ending this current time period of $28.48. If we zoom into the 6-month range, we can see that starting at least in September, it was relatively steady for NIO stock pricing, maybe across $1 or $2. However, on October 14, 15, from the release of the JP Morgan article that I'm sure everyone's seen, the stock price has jumped significantly all the way up to $26, $28. I personally thought that NIO was a great buying opportunity even before this JP Morgan article was released, which is why I purchased my shares in July with a cost basis of $12.28. And disregarding this JP Morgan article, which they're actually pretty late to the game, if we check out their actual Q3 results and deliveries, we can see that the numbers are really positive. So if we check out the vehicle deliveries chart here, we can see that the increase in vehicle deliveries every single month, all the way to the latest month that we have data with 4,708 vehicles. And this is really important because the last time they broke their record for monthly vehicles delivered was in August with 3,965, and they smashed that record, which represents a 133% year-over-year growth. In terms of the total Q3 vehicle delivery, they delivered over 12,000 vehicles, which is over 150% growth year over year. Plus, they also smashed their quarterly guidance, which was originally expected at 11,000 to 11,500 vehicles. In fact, they're trying to ramp up production even further to 150,000 vehicles a year in 2021 with their partnership with Jack Motors. And if that wasn't ambitious enough, their CEO came out and said that they're going to double their annual run rate to 300,000 vehicles a year. And it's not like they're pulling these numbers out of thin air either. If you stay for the future market opportunities, you'll see exactly why this actually makes sense for them. But before we get there, if you are new to this channel, make sure you join our investing community by smashing the subscribe button down below, as well as ring the notification bell to get the latest and greatest at least 2 videos every single week. And while you're down there, also turn that like button into a beautiful blue. Now let's check out the products that NIO offers. And right off the bat, NIO currently offers 3 vehicles. Number one is the ES8, which is a premium SUV vehicle. Number two is the ES6, which is also a premium SUV, although it is a little smaller and it is a little cheaper. Number three is the EC6, which is a coupe SUV, which is a direct competitor to the Tesla Y. And you heard it here first, folks. They're also planning to release a brand new electric vehicle sedan, the ET7, in January 2021, which is targeted to compete directly with Tesla Model S. In case you haven't noticed, NIO is targeting the luxury premium electric vehicle market in China. And you definitely want to keep this in mind because we're going to see exactly why NIO is positioned so well in order to dominate this particular sector in the Chinese market. Outside of their purely vehicle production, NIO is also known for their BaaS, or battery as a service. NIO offers a comprehensive, convenient, and innovative battery solution for all their NIO products. These NIO power solutions are so innovative that even Tesla cannot compete in this space right now. For example, NIO offers a 3-minute battery swap solution, meaning if you are driving your vehicle and you can't come across a charging station, you can simply swap out your battery in 3 minutes or less. Which, by the way, is currently live right now, and they hit their 1 millionth battery swap milestone in the beginning of October, which proves that this concept actually works and is happening. Not only that, if you can't find a charging station and you don't have a battery swap available, you can simply call up NIO Mobile Power, and they will personally drive a battery van to you to charge up your vehicle or to swap out the battery. And having this convenience isn't something that Tesla owners can even fathom right now. But of course, that is not it for NIO Power Solutions. They also have other things called Public Charger, which is a public fast charging solution, Power Express, our 24-hour on-demand pickup and drop-off charging service. In addition, NIO vehicles are compatible with China's national charging standards, meaning that NIO vehicles are compatible with over 258,000 charging stations throughout China. Ooh, and now let's get into the future market opportunities that NIO offers, and you definitely want to stay for the second market opportunity because this is really big, guys. The first opportunity is where it's getting its funding. NIO recently got an injection of $1.4 billion in cash from a Chinese state government. Although NIO as a company is still independently owned, meaning that their board of directors and their management team still makes their own decisions, they are getting government subsidies from China. And this is really important to remember because China wants to lead the world in electric vehicles. And yes, you might be thinking Tesla is an international company. They have a factory in China that's producing and selling to the Chinese market. But I do not have a doubt in my mind that if China wanted their domestic brand to take over the Chinese market, then they would have no problem doing so. Meaning China wouldn't mind giving even more and more and more cash to NIO so that they're able to dominate the domestic electric vehicle market within China. And the second future market opportunity for NIO is simply the shift in consumer sentiment in the Chinese market. We've seen historically that the Chinese market preferenced Western brands. However, more recently, we see that there is a dramatic shift from Western brands to Chinese brands. And if we look at an example of smartphone sales, foreign brands shares have dropped by 78% in 10 years. In China, Apple only has a market share of 8.6%, ranking 5th behind Huawei, Oppo, Vivo, and Xiaomi brand, but the share of foreign cars have dropped by 13% during that time period. So what we're seeing is essentially an inward shift in preference towards more Chinese-made brands. Now, if we check out in more articles by McKinsey, we can see that China is winning half of the luxury world. And expected of 2025, this dark blue is the Chinese consumers for luxuries brands, and you can see it's growing substantially every single year, and it's expected to reach 40% of the global market. And sure, it's just premium brands in general, right? But what about the premium car market? China is now number one in terms of the premium car market, which is expected to grow even further as we continue to progress into more and more years later on. And yes, you're 100% right. It doesn't necessarily mean it's just going to be electric vehicles that the Chinese consumer demands. It could also be regular gas engines. But there is another article, and this article is more along the lines of, do you believe that internal combustion engine vehicles, for example, diesel, should be banned in the future? We can see that China has the strongest stance against banning ICE vehicles. It's very obviously to see that if they don't want ICE vehicles, then the other option is going to be electric vehicles. Then I think it's safe to say that they are preferring electric vehicles in the future. So ultimately, from all these different articles, we're seeing a huge spike in demand in the Chinese market for Chinese branded electric vehicles in the premium/luxury category, which is why NIO and China are in such good positions, at least for the future, for the electric vehicle market compared to Tesla in the United States. Now let's move into the next section of what am I going to do? Like I mentioned earlier, I currently own 300 shares of NIO with a cost basis of $12.28. I am looking to purchase even more shares of NIO. However, with the recent increase in the price of the stock, I'm going to hold my horses a little bit. Mostly because I already have a decent amount of shares in NIO. I'm going to wait until the hype dies down a little bit further, mostly because of that JP Morgan article that they released. I personally believe that there will be a small pullback in the next couple of weeks or even months, given that the price has increased pretty substantially within the past couple of weeks. Although I do agree that it is currently slightly overvalued given the amount of sales that it has made recently, I don't believe that the growth for NIO is going to be linear, meaning I believe it's going to rise exponentially within the next couple of years. And if you're interested in owning shares of NIO stock, make sure you smash the subscribe button down below because I'm going to be making future catalyst videos on NIO as well as current event updates. If you want to check out an electric vehicle company made in the United States, check out this video over here or check out my investing playlist up here.